Hello, we are here to present you the final video for our Innovation Management course, and I'd like to invite you to a journey through Kiva. Have a good trip.
How do people finance themselves? Usually, when people and companies needed money, they would go to banks to get a loan. Unfortunately, not everyone can get it. Banks are highly regulated. Their credit approval process is very extensive, and they ask for collaterals and high interest that most people are not able to pay. But around the world, billions of people are living without access to a savings account, loans, insurance, and fund transfers. That's why microfinance firms came along to offer financial services, specifically fighting poverty and hunger. The most powerful facet is microcredit. Microcredit institutions started with the Grameen Bank and offer loans of a few $100s at a time to people in need. One example of a non-for-profit microcredit institution is MOL.
My name is Move, and I give credit to Hope. Let me tell you how microcredit functions with Move. We are now in two fields, Mozambique and São Tomé. We work with two banks, BCP and Caixa Geral, and they give us the microloans for the entrepreneurs. Move give 50% of the collateral, and the bank gives the other 50%. How do we choose the microcredits? We, as a team of 5 volunteers, do a total criteria to choose 5 projects. And then the 5 projects chosen, we go with the entrepreneurs to the bank and raise the money and start the project that they've applied for.
Microfinance institutions have several limitations, such as limited and uncertain subsidies, the transaction times, the interest rates, and the geographical boundaries regarding their activities. New platforms started to emerge to overcome some of these limitations, expanding availability of microcredit through individual lenders in the developed world. Now we have crowdfunding. What is then crowdfunding? The basic idea is to raise money through relatively small contributions from a large number of people, combining the best of microfinance and crowdsourcing. Crowdsourcing is already a global phenomenon, as the whole industry has raised $1.5 billion in the last year and is on track to double in 2012. So then what are the future development opportunities in crowdfunding? They come exactly from the threats of the conventional lenders. Therefore, crowdfunding is faster, more flexible way of lending money according to your availability to pay the loan, and more customized in the sense that you can choose whom to lend to. On the other hand, there are some threats to be considered. We can argue that we don't know where our money will go and if it ever will reach the person we want to help. Will the social-oriented culture remain with the firm we invest in, or will it change towards another direction? Is this market going to be too much regulated? As far as microcredit is concerned, crowdfunding is playing a crucial role in the industry, and this is reflected by the industry report of the year 2011. Having taken into consideration this type of funding, lending-based platforms and social models have raised $552 million, while donation platforms have raised $676 million.
This is Kiva. Kiva is a non-profit organization with a mission to connect people through lending to alleviate poverty. Leveraging the internet and worldwide network of microfinance institutions, Kiva lets individuals lend as little as 25 opportunities around the world. Since its foundation in 2005, Kiva has grown to about 765 lenders around 85 countries, and with a surprisingly almost 99% repayment rate, they reached the 300 million in loans. So you can go and help at kiva.org. All this crowdfunding platform has mechanisms focused in supporting and promoting entrepreneurship for those people in countries which do not favor the same access to credit conditions.
This is Pedro. Pedro is a small coffee producer from Bolivia, and he has just lost one of his cows. Now, you can help people like Pedro in the third world countries by just surfing the internet. Kiva is a website that allows you to lend a small amount of money to Pedro. Kiva withdraws the money from your bank account and is going to send your money to the field partners, the microfinance institutions that are located close to Pedro. But now imagine that not only you but the entire crowd can do the same and lend $25 to Pedro. This has a huge impact in the life of these people. With this money, Pedro can buy a tractor and produce much more coffee than before, and now he can be a better provider for his family. Pedro is going to pay back your loan, and now it's up to you. You can either lend to the next entrepreneur or withdraw your money.
Of course, lending through Kiva Online involves some risks. First, we have the risk related to microfinancial institutions, because the field partners may face bankruptcy or operational adversities. Another important kind of risk is the borrower risk. You may wish to diversify your portfolio. When lending internationally, it is also very important to consider macro-level risks such as economic, political, or natural disasters.
So who is Kiva's competition, and how do they differ from Kiva? We talked to the CEO of United Prosperity as he explains how his company's business model allows entrepreneurs in poor countries to acquire more funds than what is donated by a customer like you through a crowdsourcing platform.
So what happens is that then we both agree, the bank and we agree that the bank agrees to lend based on a guarantee. They say that if you guarantee a part of the loan we make to the Ajivika, then or to the MFI, we will make a bigger loan.
Crowdsourcing firms that provide mainly a social benefit to communities also incorporate private benefits for lenders. Here we take a look at a firm named MicroPlace that markets itself to provide lenders with an attractive interest rate to encourage lenders to loan funds. It seems that some firms are incorporating both the for-profit and non-for-profit business models to enrich poor communities around the world. But crowdsourcing also has a different face to the name. Companies like Prosper.com solely follow the for-profit business model to provide lenders with attractive interest rates. The borrowers are also entrepreneurs looking to start new businesses, but the focus is more towards a private benefit and less of a social benefit. Next, we watch an interview conducted with Prosper CEO as he discusses the default rates associated with his firm.
It's been running about 5.2% on Prosper, which is in line with what you see at the major 6 banks that control most of the consumer market.
That's pretty good. That's pretty good.
What differentiates these for-profit organizations from banks?
So, Chris, when do you become a bank? I mean, it seems you're pretty damn close right now to being a bank, in which case you have to, fill out a lot more forms and deal with more regulators, et cetera.
Well, we are highly regulated. We're regulated by the SEC and by the banking regulators already. I think the key difference here, which we think is pretty compelling, we don't have to have FDIC insurance. People are taking the interest spread who invest. They're taking the risk. Yeah. But that means we don't have that systemic risk that a traditional bank would. So I think it has good societal benefits as well.
Even though these for-profit organizations provide a small social benefit, they still allow entrepreneurs to acquire funding at more attractive rates than what they would get at a bank. It seems like the evolution of crowdsourcing has benefited us all, except for major banks who will now compete with these large for-profit crowdsourcing firms. Based on our analysis of the so-called competition, we believe that Kiva can improve its social purpose in the following ways. Firstly, Kiva can encourage microfinancing firms to negotiate with the banks that they get funding from to increase the amount of loans given to entrepreneurs on a case-by-case basis. This is to allow new firms to grow at a faster rate and provides a larger social benefit for the overall community. Secondly, Kiva can acquire a for-profit business model and still keep the social benefits goal intact. This will attract more investors to invest in new projects, thus building a larger lender base to get more projects funded. Lastly, Kiva can provide more disclosure to lenders at ease because this information is already collected by the microfinancing firms who are funding these loans. This gives a better sense of security to these lenders and encourages them to invest more frequently.